Let's talk about what's happening in June. This is a short executive briefing for sourcing leads at brands and also for suppliers who want to get a fast read on what's happening in the market right now. The core message from our June Inside Fashion coverage is that conditions feel less chaotic than they did earlier in the quarter, but the market has not actually become easy again. What's changed is the mindset. The industry is moving away from panic and more towards a more disciplined operating environment. Now, over the next few minutes, we're going to be looking at what's stabilizing, what's creating pressure, and how regional sourcing choices are shifting, and why ongoing intelligence is more important now than when the market is a lot more predictable. Now, the first point to understand is that the market feels better now in June because the worst case scenario that we had really been fearing through most of Q2 hasn't actually come to pass. It never got really as bad as we thought it would. Yes, of course, there's been some disruptions, there's been cost pressure, of course, but we never really saw that catastrophic situation that a lot of the headlines had been predicting. Certainly, oil costs have gone up, cost of any oil based product is higher. There's been some pressure on oil supply, certainly in Asia. But on the other hand, it has never really totally disrupted supply chains. So things are not bad. The underlying environment, though, is still cautious, right? The June sourcing Inside Fashion outlook and our index is moving from panic to discipline. So I think that's really a key thing. We're still in defensive territory, but we're also seeing stabilization. This is not to say that, we're out of the woods. Brands are certainly leaning on inventory control. Commitments are certainly a lot shorter. People are looking for better sell-through and prioritizing selling at full price rather than on promotion. So we're seeing that shift towards trying to shore up the bottom line, even in a tough environment like we're in now, where before the fallback was always lean into promotions. There's at least let's try to put it much as we can at full price. Now, this is not a behavior of a market in recovery. However, it's the behavior of a market that's trying to preserve margins, that's trying to have flexibility, and that's trying to stay responsive while conditions remain fragile. So if we take a look at costs, the June picture is improving at the headline level, but not in ways that justify complacency. So we've moved into early June, okay, seeing that cotton has now come down to around 77 cents a pound at the time of this recording. Oil is down to around $93 per barrel at the time of this recording. That's considerably down month on month, but still high year on year. It's meaningful because it's reduced some of the immediate inflationary pressure that sourcing teams were dealing with in May, for example, and in April. But at the same time, we're still seeing costs high year on year. At the same time, freight remains volatile rather than calm. So the Freightos index is up 2% week on week at the time of this recording. However, it's down 3% year on year. So that tells us that the freight market is still sensitive to disruption, to routing changes, and to capacity management. The more structural issue is labor. In our June Inside Fashion, we go deeper into what we see happening with wages in some of the key sourcing countries. So, for example, if we look at Vietnam, we're seeing that wages have gone up quite a bit. And as we talk to people there who are running factories, they're telling us that wage pressure has become a real thing that's very difficult to manage, both in terms of finding workers and then what it costs to attract them and what it costs to keep them. So wages are something that's increasing, and we don't see that that's something that's going to go down. So while cost of inputs like materials and freight are likely to ease off as we head towards the second half of the year, the labor pressure in terms of wages and increasingly finding good workers throughout most of the key sourcing nations is facing pressure. Same in Bangladesh. People want higher wages. People are pushing for higher wages, and the industry has to respond to that. It's going to be increasingly difficult not to boost wages and not to boost them frequently. And we also see pressure from other industries coming into these countries, and also trying to chase the same thing, which is lower cost production. So we're facing far more pressure from the tech sector, for example, coming in, being able to pay higher wages and pulling workers out of the garment industry workforce. So the takeaway here is that headline input pressure is easing. However, the sourcing cost base is still unstable enough that brands and suppliers need to stay disciplined. Now, one of the clearest messages in our June coverage is that sourcing decisions are becoming selective by country, by product type, and by risk profile. As we talked about before, Vietnam remains a highly relevant sourcing hub. Everybody wants to be in Vietnam, and yet people realize that Vietnam is facing pressure in terms of capacity and in terms of cost. So therefore, the reason to use Vietnam is changing. The logic is becoming less about low cost and more about capability and more about execution and infrastructure and supply chain connectivity. So we're not seeing people focusing on the cost side of it in the same way. Obviously, cost is important, but when you're looking at lower cost basics, you're probably not thinking about Vietnam in the same way that you used to. And as I said also before, Bangladesh is facing more pressure, becoming more expensive. Still, it's still the least expensive place you can be. But I think a lot of brands are aware of the fact that there's pressure on that. There's pressure on the fact that LDC is going away, if not next year, soon. So these are all things that we're looking at and having to keep on our radar. Cambodia continues to grow and grow and grow, even though imports into both Europe and the US of apparel have tapered off or down basically year on year. But Cambodia's share is still increasing. Cambodia is doing really, really well in that respect. So it's really interesting to see how these markets are shifting. The old question of where is the cheapest place to go is now giving way to the question of what is more strategic, which market offers the best fit for the product, the margin structure, the speed requirement, and the company's risk tolerance. Now, even though the market is feeling calmer, logistics remains one of the fastest ways for instability to resurface. Now, the June logistics coverage in Inside Fashion makes clear that demand is stabilizing, but still it's uneven across sectors. It also points out that small changes in demand, for example, or disruptions can quickly tighten or loosen capacity. So it's important to keep that in mind. It's the kind of thing that drives rate volatility and also affects transit reliability. And the reason that matters so much is because right now we're trying to lean into, on the apparel side of things, shorter lead times, right? More flexibility, more agility. We don't want to have to commit too early to orders. So therefore, logistics is actually playing a critical factor here. The less predictable it becomes, or if it does become very unpredictable again, the strategy of being able to have that quick response, that lean inventory, becomes very difficult to manage. So for both brands and suppliers, flexibility in order timing, production planning, and in freight strategy really remains essential. Now, as sourcing becomes more complex, the industry is also changing how it manages information. In our June Inside Fashion, we talk about how we're seeing the development of what we call digital towers. So we're going from being able to gather information to be able to actually analyze it better and make faster decisions. So in June, we talk about what we call digital towers, or in some cases, people call those digital twins. And the idea is that we're shifting from basic dashboards, right, that manage information towards systems that help teams act in real time. So these are tools that are increasingly being used, not just to show where an order is or where there might be a problem, but to help teams model scenarios, to optimize inventory, to be able to reroute shipments, and to make faster operational decisions. And as we know, this matters more in the apparel supply chain because oftentimes, really most of the time, Our supply chains are fragmented across spreadsheets, emails, ERP systems, transport platforms, and supplier updates. So, in a more volatile environment, this kind of fragmented information really becomes a competitive disadvantage. The larger point really is that for better sourcing decisions, it now really depends on having better visibility, being able to have faster interpretation of that visibility, and to have stronger coordination so that we can shift gears and be able to model different scenarios. This way, you're really sitting in control as opposed to just watching the situation unfold, which is what it used to be. So, what should sourcing leaders do now? I mean, what do we make of all this? Well, first, we want to reassess country roles based on product and strategy and not just on nominal labor cost. I mean, it's always sort of within the way we look at things to look at price first. But now it's a matter of stepping back and thinking about all the other competitive advantages and levers that we have to pull. So, for example, if we're looking at Vietnam, as we were talking about before, Vietnam still makes a lot of sense for technical products or structured, infrastructure dependent categories, but it may be less attractive for those very price sensitive basics. It's also a matter of building more optionality into materials and into sourcing planning. So even where some input costs are easing, the market still has enough instability that teams need room to adjust. So third, we want to preserve flexibility in orders, inventory, and freight planning. Now, the companies that are likely to perform best in the current environment are those companies that are probably less likely to be aggressive and more likely to be disciplined. And finally, we want to improve visibility. Whether that means better internal reporting, whether it means stronger supplier communication, more advanced decision-making tools, the ability to detect risk earlier and act faster, also to be able to get external market intelligence. All that visibility is critical in order to be able to get the total picture of what's happening and make better decisions so that we can manage this very tighter and faster moving supply chain. Now, June gave the market some relief, but not a reset. Costs are easing in some areas. Labor pressure is certainly becoming more structural. Logistics remain unstable, and sourcing decisions are getting more nuanced. That's exactly why having ongoing market intelligence really matters. Inside Fashion gives sourcing teams continued monthly analysis, and the new dashboard provides weekly market updates so that teams can follow changes in materials, logistics, import trends, and wider industry signals as they happen, but without getting overwhelmed with a constant information dump. The teams that make the best sourcing decisions are the ones that go beyond the headlines and also that balance internal information with a broader view of the market. That's why leading brands and top suppliers are Inside Fashion members. They're getting those critical insights that put them ahead of the market. You can learn more about what Inside Fashion can do for your team over at insidefashionlive.net. That's insidefashionlive.net. You can find a link in the show notes. Thank you for joining me in this month's edition of Inside Fashion's Market Briefing. I'm Jane Singer, and I will see you next month.